Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look today at the Great British Pound because, well, actually on euro currency I did not see something to comment as actually we yesterday have said everything. Market mostly stands in the same area, so you can see our situation. Scrubber has been formed, market has dropped yesterday but shows minor pullback out from the lows. These major lows are still valid, but market looks really heavy and calling around this area. So we still confirm our worry on perspective on the euro because, as you know, the new political driving factor appears in Europe. That makes it really difficult to makes difficult some rally on the euro in the euro's time. We see some pressure stance on euro currency because, well, market should behave differently if it indeed intends to turn up right from the lows. And currently we see a bit different type of action, which suggests that, well, chance on the drop here is really increased. That's the reason why we called USD wait a bit with the new long positions, and it is possible to consider taking the short based against the top of the grabbers, because if driving factor starts to work and it really will be serious, these grabbers will press price down. If they will agree, I mean the court in Germany and the European Central Bank and Brussels and all this talks about the sanctions going to be imposed on the Germany will be eliminated. Well, in this case, market will just continue more high probably. Well, that's the setup that we have here. So as we do not have something really new in the euro, I thought maybe it makes sense to take a look at the cable, because here we have long-term setup in place. It's still valid. We already discussed it in the previous weekly report on the Great British Pound. Situation here develops very slow. As you can see, market has spent almost 2 months in the consolidation after the rally from the 115 lows. You could see the market stands mostly flat. And I just remind you that our major idea is to use this rally as a momentum for possible upward continuation. So once this rally has happened, we start to talk about the retracement. If you remember, we said, well, to keep an eye on the possible pullback to some of the fib levels where we intended to take the long position. And this scenario is still valid. Here's the picture that we discussed a few weeks ago. Actually, our trade is based on this huge bullish engulfing pattern, some kind of a rejection of price of something that has happened due to the turmoil around Brexit. Once it has been approved, you can see this market got the relief, and you see that this rally has happened. So once market meets the confidence, as we said on the weekly, we said, well, be prepared to the pullback, and we will intend to use this pullback for taking the long position, because we suggest some kind of the A, B, C, bottom, D, upward action on the cable. Well, in the new reality of the COVID-19 was maybe something different. It will depend on what policy, economic policy, financial measures Bank of England will take. Well, that's could change the overall perspective. But from the technical point of view, that's the pattern that we intend to use. And currently everything goes up perfect. So market hits confluence, stands in the pullback. We use this pullback for possible taking the long position. For taking the position, we consider few targets. First is market coming and almost has reached 121.75, the first fib support. Next target is XOP here, this ABC top, stands around the 50% level, is 119.40 approximately. Fib support 118.82. So I would suggest that's most probable. I don't know, maybe some effect of the pandemic will be on the market as well. But in most common cases, when you're dealing with the engulfing pattern, it should be 30%, 50% most probable retracement. So that's two levels that we will focus on. On the 4-hour time frame chart, we have another extensions. based on the recent leg of this downward action. And here was also coming to the target. They stand slightly below the level, but still it's very close to it. So you can see that butterfly target stands 2140. Fib level stands 2170. It already has been tested. OP of this ABC top inner to the butterfly stands around 120.90, so almost 121 area. So that the first cluster where we'll consider possible position taken, because in general the actual action here is harmonic, it's not really fast, it's gradual downward retracement. 1618 extension stands 120 even. It coincides approximately with the 1940, well, slightly above it, with the XOP on the daily. Ultimately, we have 118.82. I think that it's less probable. 118.85. This is XOP with the same A, B, C, D pattern, but in this case, the butterfly already will be cancelled. Well, speaking on the butterfly, it's of course not the perfect butterfly, mostly due to its placement, because butterflies should be formed on the bottom. Butterfly buy, I mean, patterns, bullish butterflies. Here, it's not at the bottom, it's mostly at top, but practice tells that extensions and the shapes of the butterfly and the tops also provide support. And we could not call it as a butterfly, but this is just simpler. But extensions that is coming from this pattern, that also could be useful. So that's been said, and there's two major levels we'll consider. The first one is around 121, where we stand almost right now. The next one, most guys gravitate to 50%. It's 120, 190, 40, somewhere in this area. That's ultimate level. Well, maybe it will be reached, but currently, well, we will see. Just to not get bad entry, I suggest that we should keep an eye on the hourly chart as well. So we have estimated the targets, we estimated the levels that we're watching. The last point in our trading plan is to keep an eye on the bullish reversal patterns on the hourly chart. Currently, consider the market moves in channel. It's downside. And here, currently, we do not have any clear bullish reversal pattern yet. So as our target has not been reached yet, so we keep an eye on this level first. This 21 area should be reached, so market has to move slightly lower. And here we need to keep an eye on the possible patterns that could be formed. So if we will measure extension of this most recent swing, for example, it tells that 161 is at 2120. So, well, that's at least something close. Maybe market will move another cycle inside of the channel and then starts to form something. So one thing that we need to have here is to get some clear bullish reversal pattern. As a rule, this starts from the butterfly. It could be 3 drive, it could be head and shoulders. We need to get the confirmation of the reversal. Once we will get it, it makes possible to take the position, part of the position at least at the support area. Then we will consider what will happen. I suggest that it would be better to split your position, at least in the two parts, and take the first level 50%, because currently in the current environment, if we wouldn't have any problems with the epidemic and impact on the economy, I would say that well, let's go along if market will form the bullish pattern and just be involved in this trade on the weekly chart. But all the stuff around pandemic, it could just press on the cable and push it to the lower levels. That's why I suggest that in current circumstances, it makes sense to split the position at least in the two parts. The first part you could take around 21, 21, 40, around this level. Next one we could consider next level. So that's approximately the trading plan that we have on the cable.